In e-billing, see site for additional facts.
Good morning, everyone. I'm Marc Rosenthal with you on this Tuesday. Here's what's happening for today. A mixture of sun and clouds. It'll be fairly mild temperatures in the mid-60s. Overnight, increasing clouds. It'll be in the 50s. Showers could arrive by dawn. Showers will end tomorrow morning. Some sun during the afternoon. It'll be in the low and mid-60s. Thursday, variable clouds, breezy and cooler. Temperatures only in the 50s. On the Money Matters Radio Network, I'm Marc Rosenthal.
Hey parents, you don't need the latest gizmo, slang, or clothes to be a perfect parent, because kids in foster care don't need perfection. They need you. For more information on how you can adopt, go to adoptuskids.org. A public service announcement from the U.S. Department of Health and Human Services, Adopt Us Kids, and the Ad Council.
Hey, I'm Mike Slater. My dad passed away at the age of 63. It's out of nowhere. Had a stroke. Super hard, obviously, for the whole family, but my dad had life insurance. This is why I have life insurance for my family, for my wife and 4 kids. And the best place to get life insurance is ethos.com, because you can do it in 10 minutes. And there's no medical exam and no blood test, just a few health questions. Get life insurance in 10 minutes so your family is protected. Ethos, E-T-H-O-S, ethos.com/Mike.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW, 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275CM FM. Concord, Boston, the Money Matters Radio Network.
October 24th is National Food Day, a perfect time to celebrate fresh, local food right here in Massachusetts. Fall harvest season is in full swing with crisp apples, sweet pears, pumpkins, squash, cranberries, and hearty root vegetables at your neighborhood farmers market. Markets are still open, so grab your bag. Support local farmers and bring home the flavors of autumn. Sponsored by Mass Farmers Markets, helping grow farmers markets across the state. Find your local market at massfarmersmarkets.org.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family, including his father Victor and his brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Marc is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Marc Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we've got a guide available this month titled Understanding Required Minimum Distributions. Mike, a lot of changes in the RMD landscape. When do people have to take RMDs from either IRAs or Roths?
How old are you?
Me personally?
So this does start changing now. It is currently 73 for a lot of folks. For some younger folks, it's actually now going to be 75 years old for your traditional IRAs and 401ks. And so that started at 70 and a half just a few years ago. And so this is a new set of rules for a lot of people.
When you look at how the penalty situation has evolved, this is one area that's actually gotten a little bit more lenient in recent years. And so that's something where if you are new to RMDs, there are some incentives if you've missed one to get that squared away as soon as possible.
There are, but, key takeaway. understand these rules and don't miss your required minimum distribution, because there are still penalties for something that, again, is completely avoidable. Yes, the penalties used to be bigger. They are less stringent now and a bit smaller, but it is still unnecessary extra taxes and fees that you will end up paying if you do miss your required minimum distribution. So get our guide and learn a little bit more about how all of this works.
Folks, the guide is titled Understanding Required Minimum Distributions, and there are two ways that you can request it. The first is by calling 800-393-4001. The second is by visiting ArmstrongAdvisory.com. Again, that number is 800-393-4001, or you can request it online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning, happy Tuesday, and welcome back to the Financial Exchange. It's Mike Armstrong, Marc Fandetti, and Tucker Silva with you here as earnings season heats up. We have 89 S&P 500 companies, reporting earnings this week. That includes Tesla, Netflix, which will be going today after the bell. In the meantime, we heard from General Motors, Coca-Cola. Let's see, let me get the whole shebang here. GE Aerospace, Philip Morris, Raytheon, Danaher. So a whole bunch of companies have already gone ahead and reported. I had to go look on page 2 for General Motors, given how small their market cap is these days. But actually some glimpses of good news from the auto sector, which has been all bad news as of late. We're going to take a trip down to Argentina, where Marc's going to give us some tango lessons and also hopefully figure out why the U.S. is considering lending Argentina's government $40 billion. And then later in the show, we'll be joined by Andrew Ross Sorkin, the author of 1929, as he joins us to talk about his new book on the Great Depression. But I guess we'll start with earnings, Marc, if that's all right by you.
Sure.
So like I said, we'll be rolling through a bunch of companies this week. Friday of this week, we'll get data on inflation as well. That's the Consumer Price Index for the month of September, which will be used to determine cost of living adjustments on Social Security. But General Motors coming out and reporting fairly strong earnings. In pre-market trading, they were up a good 9%. They're up 14% now, nearly, General Motors stock, on better than expected demand and also better than expected tariff news. So just highlighting the top line information here: adjusted earnings before interest and taxes estimated to be $12 to $13 billion in 2025. That's up from a previous range of 10 to 12.5. They're citing strong truck demand. They're also thanking the Trump administration for some carve-outs when it comes to auto parts. They extended a 2030 tariff discount on imports for car makers that produce and sell completed automobiles in the United States. So GM basically reducing the expected impact of their overall sanctions piece. And I bring General Motors up in particular, not because they're a particularly large company, right? This is, these days, a $62.5 billion company. But big employer in the United States, obviously, and also the auto industry as a whole has been in focus, at least on our program over the course of the last month, given a few bankruptcies that we have seen in that space. I wonder, Mark, I haven't really talked to you a whole lot about the private credit and auto delinquency and bankruptcy space, but your take on the state of the automobile market and potential for spillover here, if you have one. We've seen the bankruptcy of Tricolor. We've seen the bankruptcy of First Brands. Part of that I attribute to fraud and potential problems with the companies themselves. But I've also been worried about what this exactly states about the consumer and the demand for automobiles right now.
Yeah, that's a good question. To tell you the truth, we talk to a lot of, in my day job, I talk to a lot of asset managers. Sure. We manage people's money for them, but we don't do it directly. We hire managers who do it. So we talk to managers who specialize in these areas. So you asked about private credit and potential spillover effects there for demand, because if people can't get access to if there are spillovers from what happened to Tricolor, it's not a spillover. It's very direct. If there are more subprime lenders who are in trouble, and there probably are.
What was the name of the other one that was being threatened with bankruptcy on Friday of last week? Did you send that one to me?
Start with a P.
I may have.
Primalend, I think it might have been. I'll double check the name on that one. But another subprime lender being looked at pretty cautiously.
So my years and years of lax lending always culminate in a crunch.
Yeah.
So the question is, are we in the early stages of a crunch? And I say always. That sounds very confident, very definitive. Sure. But it's also true. But you never really know until after the fact.
Yeah.
So I'm not
the timing of it, right?
Yeah. Or whether or not it's going to take down an appreciable part of the industry, and thus, to answer your question, sap demand and hurt earnings.
The stuff that I'm seeing in the auto industry, to me, indicates that there is this continued real problem with subprime. And I think that feeds into a story that we've been talking about a lot, whether it's Marriott's earnings and their real success in the premium brands, whether it's Delta speaking about their success in selling high-priced tickets versus coach cabin tickets. The story of GM versus these subprime lenders, I think, tells a similar story. GM is seeing a real surge in profitability by selling $60,000, $70,000, and $80,000 pickup trucks. And if you are borrowing money from the likes of Primalend or Tricolor, you're probably not buying an $80,000 pickup truck to begin with.
Yeah, I think one of the challenges that analysts like me, I'm not a stock analyst, but sort of an economic and investment researcher type analyst. One of the challenges we're going to run into, Mike, is that the health of big companies is no longer indicative necessarily of the health of the average consumer. Those two things have decoupled. I don't know how tightly coupled they've ever been. It may have just been a myth.
Sure.
I do know, and you and Chuck and Paul Lane have talked a lot about the fact that nearly the majority of spending, maybe now the majority, is being driven by the top percentiles, whether it's top 5 or top 10%, doesn't really matter. But the growth in spending is being driven by the wealthiest households. And that's in turn driving earnings, which is in turn propelling stocks, which is in turn abetting the so-called wealth effect, how much of people's stock gains they tend to spend on stuff. Mm-hmm. So you get this, I'll call it a virtuous cycle, even though it's probably not sustainable, because you can sense the circularity in what I'm describing. Stocks go up, so people spend more. That in turn pushes stocks up, raises the question, well, what if the economy consisted just of a stock market and nothing else? Would people just keep spending? Of course not. That's absurd. But the point is, Mike, I don't know. It's great that you and Chuck and Paul talk about corporate earnings, but I'm not sure how much light that sheds on the health of the typical consumer or the typical listener to this show.
Yeah, it's difficult for me to look at, say, the top 10 companies in the S&P 500.
Yeah.
and reminder that makes up, 46% of the total index now, and point to any of them and say, oh, yeah, that is a company whose profits are really driven by a broad spectrum of the U.S. consumer.
Yeah.
Right. But I think what we're starting to see here and there is companies that do serve that lower income consumer. PrimaLend and Tricolor are, two of them who we didn't know their names prior to this, and they don't have a big impact on the stock market. We're seeing real cracks in the foundation of those companies. And the question that I have is, okay, these are two relatively unknown companies. What are the other ones that are out there that I'm not really thinking of that also serve a lower income consumer and derive most of their income
this is
from
what
it?
Jamie Dimon meant when he used the cockroaches. It's a perfect analogy. I mean, if anybody should know, he should know. Jamie, if you don't know where the cockroaches are, you got to go talk to your underwriters. I mean, for Pete's sake. But so that's what he meant.
And so we'll continue to draw that out as the week goes on. Right, we've got 89 different companies who are reporting earnings, but when I take a look at them, you go down the list here, right? Netflix, GE Aerospace, Coca-Cola, Philip Morris, Raytheon. I suppose a couple of them.
Yep.
Right? Like, when I think about which ones could I measure the overall health of the U.S. consumer, Netflix might be one.
Yep.
Coca-Cola could be another. Philip Morris might be another where...
I stand corrected. But.
But those aren't going to be big drivers.
About the index.
Those aren't going to be big drivers of the stock market, but
right.
I do think they are really useful indicators for... hey, will these companies be able to continue to drive growth? Will they be able to see the same sales that they have become accustomed to and have been priced into, given what we're seeing in the weakening of the bottom half of the U.S.
This is why, and you'll talk about this with Andrew Ross Sorkin in the next hour, did the 29 market crash instigate or contribute to the factors that led to the depression? Most economists would say yes, but it wasn't the proximate cause. Well, you'll get his take on that in the next hour. The point I want to make is the changing complexion of the stock market and the structure of the economy make answering the really interesting questions on everybody's mind, to wit, are we going to have a recession? Is the stock market going to crash? Is it too pricey? Is spending going to slow? Am I going to be able to sell my house? When I have to start selling stocks when I retire, are they going to be down relative to where they are? Those are the big questions on most people's minds. It's hard to answer those questions using traditional forecasting methods, speaking just as an analyst here, when the structure of the economy is changing and when the composition of the market is changing as it has over the past several years especially.
Let's take a quick break. Yesterday, if you happen to notice, many websites weren't working terribly well. It's been more than 24 hours now. We've got a little bit more information on the crash yesterday. We'll talk about that next on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Turning 70 isn't just another birthday. It's when the clock starts ticking on your retirement withdrawals. At age 73 or at age 75 if you were born in 1960 or later, you need to start withdrawing money from your IRA. They're called required minimum distributions, and missing one can mean big penalties. Taking the RMDs at the wrong time can also spike your tax bill. Even the type of account matters, since your IRA and 401k follow different rules, which could get confusing fast. Our new guide is called Understanding Required Minimum Distributions. It breaks the process down in simple terms so you know when to start, how much to take, and ways to manage the tax impact. Request your copy today by calling 800-393-4001. That's 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com. Cushing & Dolan want to help you avoid costly mistakes when it comes to gifting assets to your children. Their brand new guide, Making the Most of Gifting Assets, shares crucial strategies to help you protect your legacy and your family. Many people think gifting is always a good thing, but if it's done the wrong way, it can create real headaches. Even well-intentioned gifts can cause complications if your children are dealing with financial pressure or legal issues like a divorce. The guide also explains how a major gift, like a home or vacation property, could come with hidden tax consequences that may impact your entire estate plan. Before you make any big moves, arm yourself with the facts in this new guide from Cushing & Dolan. Call 866-848-5699 right now to get your copy. That's 866-848-5699. Or request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Looking for a getaway that's easy, warm, and unforgettable? Discover the magic of the U.S. Virgin Islands, St. Croix, St. Thomas, and St. John. Just a short flight from New England with no passport needed and no money to exchange. Soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your fall escape now at visitusvi.com. That's visitusvi.com.
Well, Mark, this time yesterday, Chuck and I were discussing the outages caused by Amazon Web Services, probably the bigger story of yesterday, and likely the biggest disruption to the internet since, what was it, a few years ago, CrowdStrike, that took down, billions of dollars worth of business when they took down Microsoft servers based on a screw up that they made. Still not exactly clear what happened, but apparently, according to reporting, the trouble started right after midnight along the East Coast, and it was involving an update to the domain name system. To make a long story short, Amazon Web Services today has about 30% market share for all sorts of web service hosting. All sorts of big and small companies rely upon them to host everything that they do at their companies that are digital and on either an internet or intranet service. And when a little screw up like this happens, it compounds very quickly. It was apparent to me that some companies were better at getting themselves back up and running than others, and I don't think any of that had to do with their relationship with Amazon or anything along those lines. I think it mainly had to do with some companies had better backups in place. But in speaking to somebody with a major company yesterday, the answer was, yes, we've got backups in place that we can switch to, but it's not this automatic quick thing that happens, right? You have to physically switch over to a different server farm or to a different backup that you use, and it disrupts all sorts of things for a long time.
So forgive me, I don't know a thing about this. I do know that, as you say, companies store their data off-site. I'll just say off-site. You can say it's in the cloud. So when the cloud goes down, I go into my network drive. Most people know what that means. I'll just use the language. I'm not an expert. I just know that's what it's called. I want to access something I looked at 6 months ago. It's not saved locally. It's saved in the so-called cloud.
Yes.
There were people who, because they used AWS yesterday, couldn't do that. So you wanted to pull up a spreadsheet for last quarter to update it. You couldn't get it because. So
or if you wanted to access your payment system that's available on your website that might be hosted on Amazon's cloud again, you might not be able to accept a payment for your customer. You might not be able to print a shipping label to your printer. By the end of the day, 142 different Amazon Web Service products were affected because there was just kind of a ripple effect and chain effect of, switch over to here, switch over to there, and then that system gets taken down as well. So I can't claim to be an expert on any of this stuff either, Mark, but I think what we're learning through events like this is that those systems are quite A, concentrated, and B, fragile. Mm-hmm. More fragile than I think most people previously
But now that we know
realized.
about this, do businesses have an obligation to back their? What is the point of backing up your data if it's already backed up on the it's backed up when you save something? I know it's backed up on your C drive. Most people who have a computer know what that means. It's on your hard drive. But after 30 days, it effectively goes off your C drive and ends up in the cloud. Do businesses now have a duty to back up what's on? I thought the whole point of the cloud was it is the backup.
So here would be my takeaway. This event seems like it's primarily behind us at this stage, and companies and Amazon has fully recovered from it. Do businesses have an obligation to back things up? No, I guess it depends on what business you are. If you're Bank of America, then probably. If you are, what was the site I was trying to get on yesterday? RV Trader, which is a company that buys and sells used RVs. Yeah, probably not. I don't know that any regulator is going to come after you and say, hey, RV Trader, you're pretty integral to the financial system. You better make sure that your website has backups. I think the bigger question, right, like let's say that this was out for a week. Would companies that have the ability to get back up and running with their backups within 24 hours? Like those are the questions
What do
that
they
I
back
think.
up the cloud with? Another cloud server provider?
Another cloud server provider.
And what backs up that
duplicated
cloud? That's what I want to know.
Well, then you're screwed. Yeah, if they both go down, then forget about it. I don't have an answer for you, but I think the answer clearly is it depends on how important and big of an institution you are. It depends on what sort of stuff is relied upon in your network.
We're going to end up bringing all these servers back on site at some point. I hate to say it, but if somebody finds a way to exploit this vulnerability, or if these things just become unreliable at a certain scale, you're going to almost have to have your own servers.
I think many of these places do. I think that's the answer is many of these places do, and in some cases, like the cloud is the backup. But, I mean, that doesn't fix the problem either, Mark, because 10 years ago when we were evaluating this stuff internally, the question was, okay, well, what happens if your building burns down? Mm-hmm. Really great that you've got that backup location you can work from, but if your building burns down, then you don't have a website, you don't have an intranet, you don't have any of the files that were stored to that local server, and so what's the bigger risk? Amazon being out for a day or week or a month, or your building burning down, or thieves walking away with your physical server? And generally the answer was the risk is bigger that your building burns down, and so you better go to the cloud. And you're probably right. Maybe the pendulum starts to swing in the other direction here, the more of these that happen. We don't seem to have any insinuation, by the way, that this was a attempted hack or denial of service. That could come out at a later point in time. I would just say, based on previous events like this, I would consider it equally likely that somebody punched the wrong number into the keyboard, into a series of code, and took down an entire string of systems, similar to what happened in previous events. So we will see what we hear.
Apparently it was a minor update from a domain name system or a DNS or something, and one number wasn't reading another number, and that's the ripple effect that happened afterwards.
Yeah.
Just a minor update.
Yeah, and again, I think that speaks to, two concerns that I have. One,
why
can one bozo like me really screw up a massive update like that and take down a third of the internet? That's pretty concerning if you are Amazon, because I would assume you're going to be paying some money out to your customers to take account for the screw-up that you had here. 2, why are we so concentrated with 3 companies? Between Amazon, Microsoft, and Google, that accounts for 70% of the cloud infrastructure that's out there. Again, we won't let Spirit.
It's a scale business.
We won't let Spirit Airlines and JetBlue merge, but we will allow these 3 to control the entirety of the internet. There's some fair questions to be answered there. Quick break. When we come back, we'll be talking Argentina, but first, Wall Street Watch is next.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Sometimes we know it's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
Hi, guys.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. Cushing & Dolan know that gifting assets can be one of the most emotional and challenging parts of estate planning. Their new guide, Making the Most of Gifting Assets, can help you learn what to consider before making a major gift, like your primary home or a vacation property, and avoid unintended tax problems. Call 866-848-5699 to get your copy, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. If you're approaching your 70s, you might be thinking about slowing it down, but the IRS is just getting started. Required minimum distributions, or RMDs, kick in starting at age 73. And if you were born in 1960 or later, that number jumps to 75. RMDs are more than just a box to check. They can impact your taxes, your income plan, and even what you leave to your heirs. If not done properly, it could mean big penalties, but getting them right might help keep your money working for you. Our latest guide, Understanding RMDs, breaks down how they work, when to take them, and strategies that may make them less of a tax headache and more of a financial opportunity. Request your copy today by calling 800-393-4001 or by visiting ArmstrongAdvisory.com. That number again is 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan, with their master's in taxation. And today we're talking about the implications of gifting assets away. Todd, if you're trying to protect your assets from the cost of long-term care expenses, what are the risks in giving your assets to a child rather than transferring them to an irrevocable trust?
Yeah, it's a very big difference, right? These irrevocable trusts that we do for Medicaid purposes, first and foremost, are incomplete gifts. So you're not actually making a gift at all when you put it into these trusts. But if you give it to a child, now you've made a completed gift. So, for example, if I gave away my house, and people do it, right? You are giving away the built-in gain in that house. You now don't have any control over the house You can't sell it and buy another one if you want to move. You need the kid's permission for all of that. Plus, if you never sell it and you die, you've trapped the built-in gain for the kids. When they go to sell it, they're going to have to pay capital gains tax. Whereas if you keep it, you can control it, get a step-up in basis for the kids when they die, and still protect it from the nursing home through the trust. Either way, it's going to take 5 years. But gifting isn't always the answer.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy on their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are in mixed territory after yesterday's positive session as investors sift through a fresh batch of third quarter earnings from major names including General Motors, GE Aerospace, Coca-Cola, and many more. Right now, the Dow is up by 0.3% or 144 points higher. S&P 500 is down about 0.1%, only 6 points. NASDAQ down by about 0.33% or 78 points lower. Russell 2000 down by 0.5%. 10-year Treasury yield down 3 basis points now and is at 3.953%. And crude oil is mostly flat, edging higher, trading at $57.55 a barrel. Before we get into earnings, some breaking news in the media space this morning after several outlets are reporting that Warner Brothers Discovery initiated a review of strategic alternatives in response to acquisition interest it has received from multiple parties. CNBC is reporting that Netflix and Comcast are among the interested parties. Warner Brothers stock is jumping over 9% on that news. Meanwhile, shares in GM surging 14% after the automaker posted a third quarter earnings and revenue beat and raised its full year guidance. The company's $3.4 billion in operating income adjusted for certain items exceeded analyst estimates of $2.7 billion. Meanwhile, jet engine company GE Aerospace handily beat third quarter earnings and revenue forecasts and also hiked its full year outlook. Shares are currently up modestly. Elsewhere, Coca-Cola shares edging higher after the beverage and snack giant reported better than expected quarterly results as higher prices helped lift sales. Regional bank Zion Bancorp reported higher quarterly earnings despite the $50 million charge-off it disclosed last week. Shares are up by about 2%. Philip Morris lifted its annual guidance as smokeless tobacco products continue to drive growth. However, shares are down by over 8% now. And after today's closing bell, we'll see more earnings from Netflix, Capital One, Mattel, and Texas Instruments. I'm Tucker Silva, and that is Wall Street Watch.
Mark, we have a couple stories about the deal with Argentina that the United States is currently brokering and negotiating and working with banks on. And for folks that haven't been following this closely, I feel like we should take a pretty big step back here and talk about what's happened here. So Javier Milei has been in charge of the president of Argentina now for a year and a half, 2 years, and has enacted sweeping reforms to the country, slashing budgets, and really trying to get inflation under control. And initially, I think he did have some success on the inflation front, but at the cost...
He's had a lot of success, yeah.
At the cost of spending a lot of U.S. dollars to maintain the currency. So
that's right.
Take a step back, I guess, and in relatively succinct terms, describe to me what's been happening over the course of the last couple of years to the best of your ability, and why the U.S. might be getting involved.
Currencies trade like any other asset.
Sure.
Dollars
you can
trade
buy
for
dollars,
yen.
you can sell them. Yep.
Dollars trade for euros and vice versa. The ratio of the two prices is called the exchange rate.
Yep.
So in the case of Argentina, they have a lot of debts that are denominated that are record kept in dollars.
Right.
So they need dollars. They get those through exports. This is true of a lot of countries. We don't need dollars, of course. We can print them. So
Sure.
thank God the dollar is the world's reserve currency. We can print what we need. We can manipulate exchange rates, do what we need to do.
To get them, Argentina needs to
They get to export
sell
stuff.
beef
You
or
have
something.
to export, yeah. It's really, or you could get help from the U.S. government, which we've recently given them. Their currency, by most currency trader and other analysts' reckoning, is overvalued to severely overvalued. It takes too few Argentine pesos to buy a dollar.
Okay.
The reason for that is that inflation's been running out of control in Argentina for years. It's
Better part of
down
the
now
century.
a lot. Yeah, for roughly the last 100 years. Argentina is a sad case, by the way. It went from having the same per head income as the U.S. about 120 years ago, i.e. it was a rich country.
Yeah.
And it still is. It's not a poor country, but it's not among the world's leading countries in terms of per capita, that is per head income. So the bottom line, just kind of cutting to the chase here in the interest of time and, like you said, brevity, Argentina needs dollars so it can maintain the value of the peso
Right.
on foreign exchange markets. Why does it want to do that? Because a cheaper peso, a peso which is worth less relative to the dollar or whatever, imports inflation. So they're controlling the currency to help control inflation. All these things are related.
Yep.
Currencies, inflation, interest rates. You can only control two of those three things. It's the trilemma of international economics.
Now, Milei's party lost a big election
Spooking
in
investors.
Buenos Aires.
This happens, by the
recently.
way, every few years in Argentina. A center-right government like Milei's, who I personally like, so I'm trying not to be biased. He's a libertarian. He wants to shrink government. He wants to cut taxes. He's brought inflation down. He's been successful in many ways. Unfortunately, successful Argentine center-right governments are always up against the clock because their reforms inflict pain on the economy.
Sure.
This movie
Fire a bunch of government employees and tell others that they can't work as much. Yeah. Okay.
And that people get pissed off.
Yep.
Forgive me, but that's what's happening there. And when they do, they vote the center-right government, whether it's Macri, his predecessor, center-right predecessor, or him. I can't even think of the other guys, but the history of Argentina is a museum of failed center-right governments that tried to do what Milei is doing, but they ran out of time because voters tire of the sacrifices. They vote in a left-wing, what they call a Peronist government. It's like us saying he's governing like a Reaganite or he's governing like a New Deal person. They call their left-wing populist governments Peronist because of Perón. Most people know Evita Perón. It's her husband that was the authoritarian progressive type.
Okay.
Anyway.
So here we stand, right, wrong, or indifferent.
Investors are worried now that they're going to start printing money again,
Yep.
spending it like crazy, back to the bad old days. That's why we gave them, effectively loaned them, but we may not get it back, $20 billion to prop up their currency. The United States of America said to Argentina, we will swap dollars for You need dollars? We'll take some pesos. You can have $20 billion in U.S. dollars. Give us the equivalent in pesos. That's, like 1,400 pesos to a dollar. So we've got all these pesos now in exchange for dollars. Argentina is going to spend those dollars trying to defend its currency. They've got an election coming up on the 26th. If Milei's coalition can perform better than expected, I think it's a regional election, but it's a bellwether. If they can perform better than expected, that may reassure investors, Mike, and stop the run by speculators on the peso.
But it seems pretty clear to me that there's some questions as to whether the $20 billion would get the job done, because why else would the U.S. Treasury be getting all the big banks together to see if they might be willing to come up with another $20 billion?
I mean, we're throwing good. This is going down a hole here. Just the history again of Argentina is one attempt at reform, followed by a currency crisis, followed by a left-wing Peronist government coming to power. It's one cycle after another. It's tragic, but it's probably inevitable. The hope is we've given them enough to beat off speculators until these elections on the 26th, and then if Milei's coalition, I'll call it his coalition, these people are somehow allied with him, I don't fully understand it. Their parties down there are crazier than ours are. If they do better than expected, that might reassure investors and staunch the bleeding. But past couple weeks, peso has been under severe pressure, again, despite U.S. assurances.
And look, I think the obvious question here, Mark, beyond all the will this be successful, will it not, it's the why the hell is the United States involved in loaning Argentina $20 billion, when realistically we have very little in the way of geopolitical, economic, or other ties.
So we did this for Mexico 30 years ago, and it
Sure.
worked. Mexico absorbed at the time, and does today even more, 10% of our imports, of our exports.
Yep.
So we had a direct economic interest in the
And we
stability
share a
of
border.
Mexico. We share a border. You don't want lots of distressed people fleeing Mexico if it becomes a failed state or something. That was a real concern in 1994. So we used the so-called Exchange Stabilization Fund, the same fund we're using today, to help Mexico defend its currency, and everything worked out. Europeans have done the same. They did the same for the Greeks in 2012. European Central Bank famously did, well, not the same, something very similar, though. The argument for Argentina, though, Mike, is far weaker. They absorb only 0.5% of our exports, so we're hardly economically dependent on them, and obviously we don't share a border with them.
Let's take a quick break. When we come back, another piece this week about the economy apparently is great, yet Americans feel like everything's falling apart. We'll cover that next here on the Financial Exchange.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping and the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com. Cushing & Dolan know that gifting assets can be one of the most emotional and challenging parts of estate planning. Their new guide, Making the Most of Gifting Assets, can help you learn what to consider before making a major gift, like your primary home or a vacation property, and avoid unintended tax problems. Call 866-848-5699 to get your copy, or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's dav5k.boston.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
Mark, Market Watch has that piece today. If the economy's good, why do some Americans still feel like everything is, quote, falling apart? I guess my answer to that is because we are not, some homogeneous society where everybody is doing the exact same. And obviously, in any economy, any time in history, there are those that are doing extraordinarily well and those who are doing extraordinarily poorly.
Yep.
And there's always going to be the case. But I guess more importantly, I want to ask the question is there something here that's unique in 2025 that a larger share of Americans feel like things are falling apart? Is there evidence that more and more Americans are actually pessimistic about the state of things today than at other times in the past? I mean, I know I can point to things like Michigan and other surveys. Yeah. But how would you answer that? Go about answering that question. And then second question would be, does it matter?
So the first question is there evidence? And
is there evidence
sort of
that it's uniquely bad right now in terms of sentiment?
Uniquely bad? It's tough to compare survey responses to past survey responses. Sure. So uniquely, hard to say. Bad for some cohorts, for some groups. If you just look at the survey data, which you've already said is weak, some are reporting financial distress. I'll take them at their word. Is it different than it used to be? Probably, because inequality, no matter how you want to measure that, has grown. We've all seen the famous, I think B of A did the original chart on the share of spending attributable to top earners, how it's grown steadily over the past couple of decades. The wealth effect of the stock market may have something to do with that. And the Fed's obsession with keeping equity prices up, it is because it believes in the wealth effect and it believes it can use the stock market to influence demand. The Fed is probably partly to blame for that. Do I have a better idea? Not necessarily. If the alternative is letting the economy grow more slowly, maybe we'd all be worse off. I have a gut response to that. I don't like it, but I don't necessarily have a better idea.
Let's assume I buy the premise that a larger share of Americans in economy that by all measurable effects that we use at the Fed and elsewhere is a good economy, right? Low unemployment, relatively low inflation. I think the misery index is around where we were in 2016. If I buy the premise that more Americans are falling behind, though, I have to assume it does eventually matter. But I certainly don't see it showing up in any earnings or stock market data or consumer spending generally.
I mean, maybe we're looking, if your main concern is how is the average earner doing, you wouldn't cite GDP. Right. We get data on median income, which is close to the average, but not quite the same thing. Use that. I mean, no one is forcing people who lament and criticize the widespread use of things like GDP and other broad averages. They're just not using them for it's like saying, my damn thermometer didn't tell me I had cancer. Well, that's not really what it's for, dude. I mean, I guess at some point you would start running a fever as your immune system went in overdrive, but maybe a bad example. I don't know, not my area. But you know what I mean. We're using these tools to solve the wrong problem. There are plenty of measures out there, including some of those cited in this article, that you can cite if your concern is how does the sort of average wage earner or middling net worth, which is most of us, feel about the economy.
Yeah, my main takeaway is that we might not be able to see this showing up in any of the immediate stock market or spending data because of how well that top-level consumer is doing.
No, nobody.
But you don't really long for a society where wealth and income inequality is growing to uncomfortable levels. That seems like it's unlikely to produce stock market problems and very likely to produce societal problems like wild swings in voting different voting groups and all sorts of other
it's good. Look,
issues.
Mike, we're having societal problems.
Yeah.
I mean, we've had a populist revolution in this country in the past 10 years. You may love or hate what the Trump or Biden administrations have done, but you cannot deny that they're exercising, especially the Trump administration, unprecedented power in the executive. He's setting tariffs on a whim. He's shifting spending around Congress hasn't been in session for like God knows how long. He's allocating spending around. He's building ballrooms in the White House. He's just sort of governing like someone with all the power. You could say you like that, you trust his judgment, or you don't. But there has been a political revolution. It is the result of probably is the result of growing inequality. Things like free trade, although I would defend it, have played a role. We haven't managed the consequences of it probably very well. That is evident in the populist revolution, and a rising stock market is not going to placate anybody.
The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences have put the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Magens Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visit usvi.com.
Bit of a big market, big market move in commodities, the likes of which we haven't seen in quite some time. Silver currently off over 7.5%. Gold off 5.5%. At one point, the silver drop was the biggest that we've seen since 2021. I guess briefly here, Mark, what have most experts attributed the rise in commodities to, and what, if anything, does this rapid drop in a single day insinuate about a reversal in that trend, if you can point to anything?
Well, focusing just on gold for a moment, because it ties into some of the other macroeconomic and geoeconomic, I don't even know that that's a word, but anyway, issues we've been talking about. The explanations provided for gold, and you should always question these because they always come after the fact. People are worried about big deficits in developed countries, high debt. They're going to have to inflate that debt away. That's the way it's always been resolved. This is not good for the dollar or other traditional safe assets, or safe assets denominated, record kept in U.S. dollars like U.S. Treasuries. So investors are looking for other safe haven assets. Gold fits the bill. Maybe some other precious metals, a subset of the commodities group, fits the bill. And maybe that's helped pull up the entire commodities complex. That's one explanation.
Sure.
Why is that all unraveling over the last couple of days when none of the underlying factors have changed?
Well, because clearly every developed nation has gotten much more fiscally responsible today.
Yeah, none of the fundamentals
No,
have,
of course
have
not.
changed.
Yeah,
Right.
Everything is the same on the ground, and yet we're seeing some big price swings here. Quick break, a lot more to cover in the second hour of the Financial Exchange. We will be right back, folks.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of of your medical conditions as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965
is the CEO of Veterans Development Corporation. Marc is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Marc comes from a proud military family, including his father Victor and his brother Timmy. Marc talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Marc is honored to continue his legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Marc, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Marc Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
Distributions. Mike, one area with some big changes the last couple of years has been RMDs as it relates to inherited IRAs. What is the lay of the land today?
Yeah, so critical things that you need to know is that for most inheritors that are not spouses, so that's your starting point. If you are not married to the person who passed away, you are most likely subject to a out in 10 rule. What has also changed is that you're required to satisfy two different rules for most folks. Again, you are required to empty that inherited IRA within a decade. You also have annual required minimum distributions based on life expectancy. So it is really complicated now for inheritors.
How does that potentially influence how a parent may leave assets to surviving children in terms of taking their incomes into account?
Yeah, well, I mean, look, it is going to concentrate this additional income in a decade time period after you're gone. And so it adds a little bit of complexity in terms of that estate planning, right? Maybe I've got two kids. One's a very high income earner. One is a little bit lower. Do I potentially reshape my beneficiaries so that they both receive the same amount, maybe after taxes? A lot of complex planning you can do there.
The guide this month is titled Understanding Required Minimum Distributions. The two ways that you can request it are by calling 800-393-4001 or by visiting armstrongadvisory.com. Again, that number is 800-393-4001. 888-4001, or you can request it at armstrong.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning and welcome back to the Financial Exchange. It's Mike, Marc, and Tucker with you on a Tuesday where we've got markets in mixed territory. The Dow strongly positive for the day, up 0.9%. The S&P up about 0.5%, and the NASDAQ currently down 35 points, or a little bit more than 0.1%. We're in the midst of earnings season. 89 S&P 500 companies reporting this week alone. Netflix, the biggest of today, will be going after the bell, but GE Aerospace before Coca-Cola, Philip Morris, Raytheon, to name a few, all reported this morning. Tomorrow, we'll be hearing from the likes of Tesla after the bell, the $1.4 trillion company, and still in the top 10, I believe, obviously of the S&P 500. SAP, IBM, Thermo Fisher, all reporting tomorrow as well. Thursday, we'll hear from T-Mobile, Intel, Union Pacific, Honeywell, and then Friday, is there anything big? Procter & Gamble, actually. Procter & Gamble will be reporting before the bell on Friday. Also Friday, we'll get a report on the Consumer Price Index. All that ahead of next week's Federal Reserve meeting as they tackle interest rates without government data. And then finally, later in the program today, we're going to be joined by Andrew Ross Sorkin, co-host of Squawk Box on CNBC and New York Times bestselling author, this time for his book 1929, and talking about the Great Depression and some of the comparison points between today and the roaring 20s, if you will. Let's go over to this Wall Street Journal piece, Marc. Anything else in terms of markets or data catching your eyes?
No, I was just thinking it's been nice not having government data. Nice to take a little break. And I don't mean that sarcastically.
Says the guy who doesn't host a financial data show 4 days a week.
Easy. Oh, true. Well, man, you guys can change format. I mean,
we were actually thinking about doing recipes and ukuleles. Yeah. It's
no, but honestly, it's so easy. We talked in the last hour about...
Tucker can't deny us because he's got a mouthful of apple right now, but otherwise he'd be screaming.
About how government data, how the big economic reports are often just not up to the task that we expect of them. People think about GDP, or at least maybe I used to, as some kind of measure of economic welfare. It is and it isn't. It doesn't capture the average American's experience, the value of the stock market. It's a different type of data. It's a price. But it can be equally misinterpreted. The gap between high earners and low earners, the extent to which high earners account for spending, it further clouds relationships between or among variables that make it really hard to draw conclusions to whether or not the economy is good in some sense for the average American, just looking at GDP, stock prices, or unemployment. That's what I mean when I say it's nice to take a step back from government data. Hopefully we don't get poor quality government data as a result of the shutdown. This is not the type of break from government data that I suppose is ideal. But in some ways, it's just nice to not have to cope with all the noise that's attendant with data.
That's fair. And markets have not seemed to mind one bit as they have just continued to float
crazy,
upwards.
Right?
Yes and no. I mean, Morgan Stanley did a report that on average, over every government shutdown that they looked at, the stock market was up, I think, an average
Well, we
of
did,
4.4%.
yeah. You could do that analysis. We've done it internally too. The problem is the sample is very, very
small.
Small. You only have one, I think, that's of the duration that this one's now projected to be, and it happened in the middle of a booming market and economy.
Correct.
I imagine if shutdowns had happened under a less favorable economic circumstances, I don't imagine it was definitely the case. You'd come to a very different conclusion.
I guess there's probably some selection bias there, right? If the economy is in a tailspin, you're not going to be willing to shut down the government when you are relying
you'd have to
on
control.
lawmakers to
There's
pass something.
bias in that since we have time to talk about it, since we have no data. But bias means, as you said, you don't have a truly random sample. Bias can come from measurement problems. It can come from omitting a critical variable. I'm not sure how you'd adjust for the state of there's way too many potential factors influencing the stock market that you cannot control for in your little model, which is what we researchers do. Yep. You give me enough data and I can give you a definitive answer. The uncertainty grows, though, with either measurement problems or things that you might have left out of your little model that you should have put in there.
Yeah.
So the stock market's picking up on a lot of things. It is a little surprising that stocks would continue to plow ahead with very little economic visibility.
Yeah, I guess my point would be I would theorize
Official
that
economic.
lawmakers would be a lot less willing to shut down the government in the event that the market was dropping.
If we were in the middle of a recession.
Percentage point a day, or we were in the middle of a
No,
recession.
you're right. Everybody feels really
hey, we're going to
jaunty.
get paid.
No, you're right.
And we're going to ask a bunch of people to work and not get paid. They're not going to do that.
No,
so,
you're right.
You know, when stock market's hitting all-time highs and things are looking pretty good, sure, shut it down and we'll go to battle over this.
Absolutely
That
right.
wouldn't happen in 2009.
No, there's very little feedback from markets to policy right now. Interest rates are falling, right? Long-term interest rates anyway are stable to falling. Markets are up.
So great news, Mark. The Wall Street Journal has the solution to everyone's angst about whether or not we are in an AI bubble with their guide to cushioning your portfolio against an AI bust. Should we do anything with this other than throw it in the toilet? I get really worried when I see any news publication
Was I supposed to read
tell
that?
me that they've got a guide to cushioning your portfolio from an AI bust. So I guess first things first, I don't know if we are in an AI bubble. I would venture to say that it is entirely possible that it ends in a bust. And I'll also say that every market cycle throughout our history has led to a bust at some point, and so we will probably see one at some point.
Sure.
But first thing first, to acknowledge, I'm talking right now. You're listening to the program. I don't know anything about you. I don't know how your portfolio is allocated today. I don't know how old you are. I don't know what your goals are. And so I would personally never give you investment advice about how to guard your portfolio against an AI bust. But Wall Street Journal thought that they could maybe do so. And so they have several categories in this piece here. One would be equal weighted funds, another healthcare stocks, international shares, software stocks, and gold.
Yep.
I think
Well,
people...
Go
ahead.
I can tell you how we did a similar analysis, so that's sort of top of mind for me. And if you look at, mine was in the context of what happens, I think, when regional banks pull back by a lot. What sectors and alternative asset classes do best, and it is dependably healthcare, staples, gold.
So
and a
historically,
few other,
when regional banks
yes,
are
but
looking scary.
So it's very easy to do this analysis. You just filter by a big drawdown in the variable that is of interest. And in this case, in my case, it was regional banks. In your case, it's tech. And tech held up okay, too, interestingly, in the early stages of what could be a bigger drawdown in regional banks.
There was only
anyway, for what that's worth.
One of these that I figured some people might not know about. What are equal weighted funds? Can you describe them to people? And I guess just compare it to the S&P 500 if you will.
That's the natural reference point. When you buy a stock index fund, typically it's market capitalization weighted. The most valuable companies in terms of the total value of their stock get the biggest weight. So Nvidia is the biggest holding in the S&P 500 index of leading U.S. companies, which is technically not market cap weighted, so it might be better to use the Russell 1000 in this example, but we're already too far down this road.
Sure are.
So it's determined by market cap weight. There are good theoretical reasons for starting with a market cap weighted portfolio when you're building your portfolio of stocks. It's a little harder to do with bonds for reasons we don't have to get into. An equal weighted portfolio says, I don't care what the biggest companies are. If there are 10 companies, if there are 500 companies in the index, 1/500th of every dollar I invest will go into, a fifth of a cent, if you want to think about it that way, 1/5 of 1/100th. Will go into each company without regard to what the overall value of the company is. Why would they favor that? Well, if you think the biggest companies are likely to teeter because they've been,
if you're worried about concentration risk, and all these things,
let's just equal weight it instead of putting instead of attaching market cap weights to each. But that gives you biases too that you may not be aware of. You got too much small and mid in that case.
Right. I was going to bring up any decision you make here, don't let yourself off as you're not making a decision.
No, you're making an active management decision. You're betting you know better than the average investor, than the wisdom, if you like, of the crowds that is represented by the market price of an asset. You might end up being right, but be advised, you're introducing new biases. And I don't mean biases in a bad way. I just mean you've got tilts now, exposures in your portfolio you didn't have before if you do it that way.
Let's take a quick break. When we come back, we're playing a little bit of trivia here next on the Financial Exchange.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network. The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping in the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com. Cushing & Dolan want to help you avoid costly mistakes when it comes to gifting assets to your children. Their brand new guide, Making the Most of Gifting Assets, shares crucial strategies to help you protect your legacy and your family. Many people think gifting is always a good thing, but if it's done the wrong way, it can create real headaches. Even well-intentioned gifts can cause complications if your children are dealing with financial pressure or legal issues like a divorce. The guide also explains how a major gift, like a home or vacation property, could come with hidden tax consequences that may impact your entire estate plan. Before you make any big moves, arm yourself with the facts in this new guide from Cushing & Dolan. Call 866-848-5699 right now to get your copy. That's 866-848-5699. Or request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zada from the Armstrong Advisory Group. Required minimum distributions, or RMDs, may seem simple, but there's a lot more to them than just taking money out of your IRA. RMDs impact how much you pay in taxes, and they can push your income into higher brackets. And if you miss one, the penalties can be steep. They also affect how much your heirs actually get to keep, which makes timing and strategy crucial. If you have multiple accounts, it's important to know which ones you can combine and which ones you can't in order to help you avoid costly mistakes. Our new guide, Understanding RMDs, shows you how to navigate the rules, limit your tax burden, and plan ahead for your legacy. Request your copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide from our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts, and this year's DAV 5K is Saturday, November 8th at Castle Island. The race is now sold out, but you can still take part by making a donation to support our great American heroes. Please visit dav5k.boston to make your gift today. Your participation helps provide vital services like free transportation to medical appointments and safe housing for single veterans and their families. Donate today at dav5k.boston. That's dav5k.boston. Time for trivia here on the Financial Exchange. And on September 3rd, 1929, the Dow Jones Industrial Average hit a high of 381. A month and a half later, the market crashed, taking the Dow down with it. It took many years for the Dow to climb back up and beat its previous high of 381. So our trivia question today: how many years did it take for the Dow Jones to pass its record high in 1929? Once again, how many years did it take for the Dow Jones to pass its record high in 1929? Be the fourth person today to text us at 617-362-1385 with the correct answer and win a Financial Exchange Show t-shirt. Once again, the fourth correct response to text us to the number 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
Mark, if there's been one reliable trend in markets so far this year, especially since the spring, it has been artificial intelligence. Obviously, beginning of this year was much more about trade and tariffs and the new trade order. But since then, it's all been about artificial intelligence. And to that end, Apple has been sort of left behind in the discussion. It's not as though their stock price has taken a giant hit.
They're not making the massive investments.
They're not making these huge investments, and they're not seeing the benefit from the lack of investment. Trust me,
sorry,
I agree.
I know you know this.
The stock for Apple was down until about September of this year, when it's just slightly turned positive now, but far away from what you've seen from the giant AI stocks. Today, up about 0.25%. Was it yesterday that it was up big? I think 4% or so on some news. And so, in spite of their lack of artificial intelligence investment, which people keep bringing up as though it's some weird thing, my counterpoint would be, this is always what Apple does. Apple is an expert at being the last to a new technology and then making it great for its users. But nonetheless, they've been criticized a fair bit this year on their lack of investment in AI, their lack of progress on any sort of built-in artificial intelligence on their phones. And yet, they had a pretty big day yesterday on apparent early sales of the new iPhone 17, looking pretty good and outpacing last year's pace of sales in both the U.S. and China, according to one research firm at least.
Well, look, from the point of view of a consumer, is it obvious that Microsoft's big investments have paid off? Are you using Copilot on Outlook or any? No, it doesn't do what you want it to do half the time, and the other half of the time, it doesn't do it well. Look, I don't. That's more critical than I meant for it to sound. I guess my point is, Apple,
saying Microsoft sucks is what you're trying to say.
I'm saying I've not, unlike in the early stages of the internet boom, which had had a tangible impact. And I'm being a little bit sloppy here, but I'm going to say it had a tangible impact on not just on economic growth and productivity at the time, though there were many years of investments in IT leading up to it. I've not seen anything as a consumer, and some of AI is operating behind the scenes, making processes easier, but I've not seen anything life-changing the way I felt and experienced the internet as a life-changing series of the culmination of a life-changing series of innovations.
Yeah. So
that's all.
Nonetheless, Apple has taken a very slow approach to all this. And again, why I bring up that seems normal to me. Apple was not the creator of the first MP3 player. They weren't the creator of the first, that was, who created the first MP3 player? I don't even know, but we don't talk about them anymore. Maybe Sony or something like that.
I think it was Sony, yeah.
They were not the first creator of a smartphone. That was BlackBerry. They were not the first creator of wireless headphones. They just made them really easy to use, work within their network of existing customers, and therefore made a ton of money on those innovations years later. Now, they've gotten in trouble for some of that stuff. On their Apple Watch, they tried to rip off some technology when it came to oxygen sensors, and so this is not a universal strategy, and maybe it doesn't work at some point in the future. But all the criticisms that I've heard about Apple not jumping in with both feet when it comes to artificial intelligence, I don't know, I've kind of quietly pumped the brakes on to say, that's never been their strategy.
What specifically is people's concern?
Their concern would be that the progress that Google is making with their AI virtual assistant on my phone, which is a Google phone.
Okay, so it's
versus the Apple
phone-based.
phone.
It's phone software. This criticism is phone software-based. They feel like Apple's lagging, and if they had more horsepower, they could. Is there something
they could
Apple's
make Siri better?
Is there something is there something that they're trying to engineer in Siri that could be done if they just had more processors? I'm oversimplifying what a data center is, but
I don't have an answer.
I'd love for that
question.
to be okay. Well, neither one of us is a stock analyst. Maybe a stock analyst has more specific insight. Where are they? Are they falling behind because they're on the precipice of something and they're not able to execute because they don't have the horsepower to do it?
Here's what I am willing to say. I have a Android phone, a Google Pixel phone specifically, which has Gemini and an AI virtual assistant built into it. My wife has an iPhone that has Siri. And when it comes to very basic things, the Google phone is significantly better at like a voice-activated virtual assistant function than the Apple phone. I'm very confident saying that in my experience using the two of them. Whether I'm driving and using it or whether I'm just asking it basic questions, giving it basic tasks, it is better at that. I will also say that it's always been better and that it's increased a little bit since we've been talking about artificial intelligence, but not significantly. Okay. And so that, I think, is the investor concern. But again, I would shoot back at that and say, that's all well and good. My wife ain't changing systems. She's not going from an iPhone to a Google phone because of her perceived difference in the usability of the virtual assistant on the two phones. So I'm not sure that matters, but I can confidently say that the progress that Google is making on my ability to assign an AI tool tasks and have it be slightly convenient in my life is far and way better than what Apple has put out there on their devices so far. But again, if I'm Apple, I'm probably just going to wait until one of those companies will sell me their tool and then just put it onto my device anyway. And if history is a guide, it'll be easy to use, well integrated, and heck, the company might even pay me to do it. So that's where I land with it. Let's take a quick break. When we come back, we're going to have a full market update next with Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. If you're approaching your 70s, you might be thinking about slowing it down, but the IRS is just getting started. Required minimum distributions, or RMDs, kick in starting at age 73. And if you were born in 1960 or later, that number jumps to 75. RMDs are more than just a box to check. They can impact your taxes, your income plan, and even what you leave to your heirs. If not done properly, it could mean big penalties, but getting them right might help keep your money working for you. Our latest guide, Understanding RMDs, breaks down how they work, when to take them, and strategies that may make them less of a tax headache and more of a financial opportunity. Request your copy today by calling 800-393-4001 or by visiting armstrongadvisory.com. That number again is 800-393-4001 or armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands aren't just stunning, they're thriving and continue to be one of the hottest spots for vacationers in the Caribbean. New cruise port upgrades, better air connections, and a sharper focus on cultural experiences are putting the islands back on the map for travelers seeking something special. St. Thomas is your cruise hub, known for duty-free shopping and the world-famous Megan's Bay. St. John is pure escape with national park hikes, secluded beaches, and tropical tranquility. St. Croix brings the history with colonial architecture, old sugar mills, and vibrant coral reefs. Visit one island or all three and get plenty of pampering, undisturbed nature, and a vibe like no other, all jammed into one vacation. With easy travel from New England, no passport required, and no money to exchange, paradise is closer than you think. This fall, plan your getaway and fall naturally in rhythm with the heartbeat of the islands in America's Caribbean. Visit usvi.com and book your trip today. That's visitusvi.com.
Marc Vonner is the CEO of Veterans Development Corporation. Marc is a career military man, having served nearly 20 years, and we are so proud to have him and his business as a key partner and a presenting sponsor of the DAV 5K Boston. The DAV Department of Massachusetts does incredible work, and it's one of the first organizations that Marc became familiar with after his military service ended back in 1984. As Marc built his company, he knew he'd be giving back to fellow veterans who needed jobs, support services, medical supplies, and so much more. Marc works with disabled veterans every day, and it's one of the key reasons why he's such a big supporter of Dan Stack, the DAV Department of Massachusetts, and the DAV 5K Boston. You can join Marc Vonner and his team and make a donation to the DAV Department of Massachusetts or become a sponsor of the DAV 5K Boston. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke, a partner with the law firm of Cushing & Dolan with a master's in taxation. And today we're talking about the implications of gifting assets away. Todd, since the estate tax laws are projected to change on January 1st of 2026, significantly reducing the estate tax exemption, does it make sense to gift away assets right now?
You know, it's a big question mark. You have to think of a few things. One, look at the size of your estate. If the exemption falls to $7 million each and you're married, you can still die with $14 million of assets and not have an estate tax. So gifting might not be important from a federal gift tax situation. But the state exemption is only $2 million, so you can only shelter $4 million. So you might want to gift to reduce your state estate tax. However, there's basis to consider. If you give away low basis assets, you're trapping capital gain. And to do that, you might be paying more in capital gains taxes later when the kids sell the assets than you're saving in just Massachusetts estate tax. So you really got to think about whether it makes sense to gift or not. And if you're going to gift, you should probably set up a gifting trust. People might be gifting large assets away and not gift the assets directly to a child. Have them in a trust for the child's benefit and then protect those assets for them.
Educate yourself about the implications of gifting your assets away. Request your free copy of Todd's brand new guide called Making the Most of Gifting Assets right now by calling 866-848-5699. That's 866-848-5699. Or you can request a copy from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets in mixed territory as investors sift through a new batch of third quarter earnings from major names including General Motors, GE Aerospace, Coca-Cola, and many more. Right now, the Dow is up by 0.7% or 337 points higher. S&P 500 is up 8 points or about 0.1%. NASDAQ down nearly 0.1% or 20 points lower. Russell 2000 dipping into negative territory, mostly flat at the moment. 10-year Treasury yield is down 3 basis points at 3.955%, and crude oil up about 0.5% higher, trading at $57.80 a barrel. Before we get into earnings, some breaking news in the media space this morning after several outlets are reporting that Warner Brothers Discovery initiated a review of strategic alternatives in response to acquisition interest it has received from multiple parties. CNBC is reporting that Netflix and Comcast are among the interested parties. Warner Brothers stock is jumping 11% on that news. Meanwhile, shares in GM are surging 15% now after the automaker posted a third quarter earnings and revenue beat and raised its full year guidance. The company's $3.4 billion in operating income, adjusted for certain items, exceeded analysts' expectations of $2.7 billion. Meanwhile, jet engine company GE Aerospace handily beat third quarter earnings and revenue forecasts and also hiked its full year outlook. Shares are up about 2%. Elsewhere, Coca-Cola now up 3% after the beverage and snack giant reported better than expected quarterly results as higher prices helped lift sales. Regional bank Zions Bancorp reported higher quarterly earnings despite the $50 million charge off it disclosed last week. Shares are up about 2%. Philip Morris lifted its annual guidance as smokeless tobacco products continue to drive growth. However, shares are down about 8%. And after today's closing bell, we'll see earnings from Netflix, Capital One, Mattel, and Texas Instruments. I'm Tucker Silva, and that is Wall Street Watch. And in the previous segment, we asked you the trivia question. How many years did it take for the Dow Jones to pass its record high in 1929? That would be 25 years after the crash of 1929. It wasn't until 1954 that the Dow Jones beat its previous record. Brian from Woburn, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Brian. We play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
Brand new guide out from the Armstrong Advisory Group this month on understanding required minimum distributions. To talk about this guide, I've got to talk about a story. A client I was meeting with a couple of weeks ago, and it was a 90-year-old and her daughter. And we were talking through required minimum distributions. The 90-year-old client obviously quite familiar with them at that stage. And we were just mentioning through all these different rules that apply. And we walked through it, and it was, okay, we've got mom and her set of rules. And then we talked about what happens when mom passes away and if that IRA gets left to daughter. And we talked about that set of rules. Separately, the daughter mentions, my husband passed away a couple years ago, and I don't remember these rules applying to his retirement accounts. And I said, oh, yeah, there is a different set of required minimum distribution rules that apply when it's a spouse. And then just for the fun of it, I brought up my mother-in-law, who was not married to a man, but was partners with a man for over a decade, and he passed away. And there was a different set of rules for that individual who passed away when it comes to required minimum distributions. If I have left you with your head spinning, it's because these are really complicated rules that have different sets of rules depending on who you are, how old you are, in what stage of life you are in, and what type of account you have. If you would like our brand new comprehensive guide on understanding required minimum distributions, it is free, and you request it by calling 800-393-4001. Again, it's our new guide on understanding required minimum distributions. You can request it at armstrongadvisory.com or 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
We have got to take a quick break. When we come back, Andrew Ross Sorkin, author of 1929, co-host of CNBC's Squawk Box, is joining us next for what I consider to be the interview of the year. Stay tuned right here, folks.
The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
Marc Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
My name is Ashley Vonner, Director of Operations at Veterans Development Corporation. I wanted to learn the family business under the guidance of my father, Marc Vonner. VDC is more than a general contractor. It's a service-disabled, veteran-owned small business that goes above and beyond for the veteran community. With Marc's military background, serving in the Marine Corps, our company is committed to supporting the Disabled American Veterans Department of Massachusetts. VDC has been the presenting sponsor for the DAV 5K for many years, striving to spread awareness of this great organization. Working for Veterans Development Corporation has shaped me into the person I am today, and I am proud to be a part of this organization.
Please visit dav5k.boston to show your support today.
Cushing & Dolan want to help you avoid costly mistakes when it comes to gifting assets to your children. Their brand new guide, Making the Most of Gifting Assets, shares crucial strategies to help you protect your legacy and your family. Many people think gifting is always a good thing, but if it's done the wrong way, it can create real headaches. Even well-intentioned gifts can cause complications if your children are dealing with financial pressure or legal issues like a divorce. The guide also explains how a major gift, like a home or vacation property, could come with hidden tax consequences that may impact your entire estate plan. Before you make any big moves, arm yourself with the facts in this new guide from Cushing & Dolan. Call 866-848-5699 right now to get your copy. That's 866-848-5699. Or request it online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Turning 70 isn't just another birthday. It's when the clock starts ticking on your retirement withdrawals. At age 73 or at age 75 if you were born in 1960 or later, you need to start withdrawing money from your IRA. They're called required minimum distributions, and missing one can mean big penalties. Taking the RMDs at the wrong time can also spike your tax bill. Even the type of account matters, since your IRA and 401k follow different rules, which could get confusing fast. Our new guide is called Understanding Required Minimum Distributions. It breaks the process down in simple terms so you know when to start, how much to take, and ways to manage the tax impact. Request your copy today by calling 800-393-4001. That's 800-393-4001 or ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's The Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
We are joined now by Andrew Ross Sorkin. He's a New York Times bestselling author, the co-host of CNBC's Squawk Box, and joins us to discuss his brand new book, 1929, the inside story of the greatest crash in Wall Street history. Andrew, thanks so much for joining us. Appreciate it.
Thanks for having me. Great to see you.
So, you wrote Too Big to Fail in 2009. You only had like a year to prep that one. What took so long on this book, Andrew?
Honestly, it was just a much longer process than I ever expected or imagined. This was a book really about going into the archives and finding transcripts and memos and diaries and letters and all sorts of material that I had to chase down, frankly, all over the country. When I got involved in this project probably close to a decade ago, I thought I could do it in 2 or 3 years max. And it just sort of took over every part of my life in the best way in some senses, because it just, these characters were so fascinating. And I think getting underneath it and being inside the room, which is what I was trying to do with this story, sort of like I did in Too Big to Fail, just was all-encompassing in so many ways.
That part comes across. I mean, the details of those people's lives at the time was truly fascinating to me as somebody who's read the textbooks on the Great Depression, but obviously this is a very different piece. You write in the foreword that the drama of 1929 was misunderstood or unknown by the public today. But now that you've written this, and I'm sure you've done book tours and talked to all sorts of folks, what are the most common details or themes that you found the public just doesn't realize about the Great Depression?
Oh, goodness. I mean, I think there's so many aspects to it. I think, when I went into this project, most people that I know would say, hey, I know that there was a crash in 1929. I think people think it happened on one day. They think it was a direct line to the Great Depression and that therefore the Great Depression just happened.
Yeah.
I think none of that's true.
Right.
The crash was actually a whole sequence of crashes. Oddly, the market came back afterwards in ways that I think are just shocking, and
unrealized.
It really was, and unrealized.
Yeah.
And then I think it was the crash itself was really more of a domino. And the story is not just about 1929. The book that I wrote really goes through 1933. It was really a series of dominoes of then very bad policy choices that really led to the Great Depression. So when you think about unemployment reaching 25% in 1932, or 9,000 banks failing in 1933, or tented camps like Hoovervilles, all of that was a function of mistakes that President Hoover was making. He was trying to raise taxes at the time. He was implementing tariffs, which obviously has a parallel to today, in part, by the way, because he was trying to make good on a pledge to farmers who had tried to get to vote for him in 1928 originally. So there were lots of just periods of moments in this that I think shifted the balance. The role of the Federal Reserve, which effectively sat on its hands during most of this period, did not flood the system with liquidity the way they should have, in part because of the political pressure. Again, a strange parallel as we have conversations today about the independence of the Fed and what political pressure looks like. Well, we saw what political pressure actually looks like in 1929. So I think those are so many of the sort of systematic pieces of it. But it really is about the people and their own motivations and incentives. And I think when you see what the decision makers were actually thinking and what they were saying and the conversations they were having with their wives, it changes everything.
Andrew, one piece that really stood out to me was, all the discussion about the Fed and Congress at the time in the 1920s through the early 30s. How do you view, you conduct interviews with all of these people and business leaders and others. How do you view changes in those institutions over the course of the last century, like the Fed and their attitude towards markets and downturns, and Congress too? In my mind, when reading your book, it seemed vastly different, at least the attitudes towards these types of events in those institutions.
Well, I think there's so many similarities and so many differences. One of the similarities is actually that, famously there was a senator named Carter Glass who ultimately puts his name on a bill called the Glass-Steagall bill, which breaks up the banks in 1933, quite famously. But, he was the Elizabeth Warren of his time, and he was railing about Wall Street. And actually a guy named Charles Mitchell, who's another main character in the book, who he believed was going to, upend America because of all the leverage in the system. So there were these people who do have these sort of parallels to today. At the same time, I think politically there was a view you don't flood the system, for example, with money after a crash. You hold back, you raise taxes, you do all sorts of, you get into an austerity period. But the lesson, and by the way, we saw that lesson actually get learned in 2008 by Ben Bernanke, who had written his thesis, his PhD thesis at Princeton on the Great Depression. So he saw this firsthand in terms of just, the mistakes are, unfortunately, oftentimes when there is a crisis, you have to reward the arsonists. I mean, it's sort of a hard pill to swallow.
Andrew, leverage was, of course, a huge piece of your story. Margin loans and all the speculation that accompanied it, and is seemingly part of every stock market crisis that we see.
Yes.
I wonder, from your standpoint, where is the leverage in today's market? Where are there worrying degrees in leverage in today's market? If you do see that, I'm sure there are areas where we can go find that. And what are the differences between then and now?
So a couple things. First of all, I do believe that leverage really is the match that lights the fire of every financial crisis. It really is that. You can make a lot of mistakes without enough leverage. It doesn't boil over to a demonstrable crisis. Back then there was no SEC, there was no insider trading laws, there was nothing to stop you from pump and dump schemes. There were no capital requirements that the banks had. The good news is a lot of that has been solved, or at least resolved to some degree. Having said that, there's still a lot of leverage in the system. You go look at margin loans today, they exist. You look at what's happening in the AI boom, maybe bubble. There's a lot of leverage. Not, people look and say, oh, there's cash coming out of, Meta and Google are paying for all of these data centers. Yes, but you go look at how some of the data centers are being created in terms of, who's funding the real estate piece of it, who's funding all of the energy and electricity that's required. There is serious leverage there. And the other piece of it is it's in the private credit space, which people talk about as the shadow banking system. So I don't think we have a full sense of what it is. There's part of it should be better off in some ways because it's not on the balance sheets of the banks. It's in these private credit funds, but those private credit funds are sometimes leveraged and extended to the banks. So I think we have to do a little bit more work to really understand all of that. And I would actually urge people to focus on that.
Yeah, I know a lot of our focus, frankly, over the course of the last few years has been the expansion of private credit. And I think just over the course of the last few weeks with some bankruptcies, we're starting to see under the covers there of where that can seep its tentacles.
Well, Jamie Dimon made a comment.
Cockroaches,
when cockroaches, exactly, the cockroaches.
Andrew, what would, you've spent the last few years living in these people's diaries and personal writings about the Great Depression. What would the Wall Street and political leaders of the 1920s and 30s think of some of the gambling-like products of today? Like I think of zero-day expiration options, prediction markets, even sports gambling today is more prevalent. How do you think people of that age would reflect on where we've come today?
Well, I think those who went through the crash would think it's slightly insane that some of this is happening. I think they would argue, you want some kind of speculation in the system. You do, actually. It's the twin of innovation. So you want new products, but you need to do it responsibly. And I think there's a question mark about what that looks like. You haven't mentioned where I think actually the biggest amount of leverage exists, which is in crypto right now. I mean, there are some of these products that have 20 times, 50 times leverage. I don't think it's a huge part of the crypto space. I think it's maybe 5 or 10% of the crypto space, but it's still meaningful. And I think that's, meme stocks, that's where, places where there isn't regulation is where I would argue we should probably be more focused than some of the other places in the markets today.
Yeah, I tend to agree. I mean, I live and breathe in the stock market every day, and I don't see that same relentless optimism about the lack of possibility ever for a crash as you wrote about leading up to the 1929 crash. But I will say I can see that echoed in some parts of other markets. And so you mentioned crypto. Is there anywhere else that you just see this relentless push towards optimism in markets in 2025 or over the course of the last few years?
Look, AI. I mean, I just think NVIDIA is there was a stock called RCA. It was a ticker symbol radio in 1929. It was the future. It was radio. And by the way, it had patents for television. And people said, this is going to change the world. And it was going to change the world. It was the NVIDIA of its time. It was the meme stock of its time. And that stock, I think got up as high as, I think something like $300 or $500 split adjusted, and then fell down, a couple years later to $2 or $3. So things can happen, and we just need to be aware that those things can happen. I think some of these round trip deals that NVIDIA and others are making, by default, should be red flags. That doesn't mean that it's going to fall or that it's going to be a crash or anything else. This could all work out and be great. It just requires more vigilance.
Andrew, excellent book. Really appreciated it. Appreciate you joining us today. Andrew will also be at the Back Bay Events Center this Friday, October 24th, for a discussion sponsored by the Boston Book Festival. You can check it out online. And again, the book is 1929 by Andrew Ross Sorkin. Andrew, thanks so much for joining us. Appreciate it.
Thank you for having me. Appreciate it. See you in Boston.
Great. Yeah, thank you.
You bet.
Yeah, it is one piece stuck with me throughout the entire book, which is we do not have a full appreciation for how those things played out. And frankly, the generation that had a real knowledge of the Great Depression and what led up to it and the feelings behind it, frankly, they're not with us anymore. And so we're now in a generation that does not remember the Great Depression.
Yeah, it's one of the parallels is the financial kindling, and the Fed is of course, my usual rant. The Fed is responsible for broadly speaking financial conditions. The kindling, Mike, is certainly there, and when the kindling is excessive, any spark could result in a big conflagration. The Fed encourages too much risk taking, which I feel, other analysts feel like it's doing right now. The stage is set. The question is, what, if anything, will provide the spark to ignite the kindling? Maybe nothing. Like Andrew said.
Markets have turned slightly positive for the day. The Dow currently up 321.7%. The S&P 500 up about 10 points, a little bit more than 0.1%. The NASDAQ is almost exactly flat for the day. Taking a look around, gold and silver were both taking a hit earlier. They've recovered some of their losses, but gold still down $200 an ounce, 4.7% on the day. Silver off $3 an ounce, off over 6% for the day. That's all the time that we have for today's Financial Exchange, but the earnings are going to continue. We've got Netflix reporting after the bell today and Tesla coming later this week, so tune in all week, folks. Have a great rest of your day, and we'll be back on the Financial Exchange tomorrow.